So if you remember what Jerome Powell was saying in the beginning, he was saying we're going to have a soft landing. Then he said we're going to have a softish landing. And now he's saying we might have some pain in the process. And you could see how his tone is changing. And many people kind of believe him that we're going to have some kind of a soft landing. And they kind of don't really believe the data, like something like the yield curve, which has pretty much predicted every single recession we pretty much ever had. And look how steep this inversion is. To me, this is very, very scary. And they don't really listen to people like, Jamie Dimon, who knows pretty much a lot of things we could maybe never have access to. And he's saying that he only sees a 10% chance of an economic slowdown that doesn't lead to a recession. But he sees a warning of there are 20 to 30% odds of something worse than a recession. Now, why would we have something worse than a recession? Because the Fed is tightening in a slowing economy. Whenever the Fed tightens, they tighten in a growing and, fast-growing economy to slow it down so we don't have inflation and stuff. And they kind of stimulate whenever we have a weak economy. Well, now we're having a weak economy and 2 quarters of negative GDP, and the second 2 quarters are likely going to be negative also. And the Fed is not helping, they're actually depressing more and slowing the economy more than it's actually slowing, and this could lead to something pretty bad. It doesn't have to lead to something bad, but if you take history as a guide, it tends to lead to something pretty bad. But if you don't like listening to those two people and Jamie Dimon, maybe you could listen to the FedEx CEO. And this guy really, he really knows what's happening with businesses, because his company and his shipping, it affects all companies and the entire global economy. And FedEx CEO, he expects the economy to enter a worldwide recession. And he said, we're seeing that the volume declining in every segment around the world. So, we've just started our second quarter. The weekly numbers are not looking so good. So we just assume at this point that economic conditions are not really good. We are a reflection of everybody else's business, especially the high value economy in the world. And many people were actually surprised by this, but you could not have been surprised. You could actually have anticipated this happening if you just listened to Jim Cramer, which he predicted that FedEx will have a great year. And as you know, with the inverse Cramer indicator, whenever Jim Cramer says something, normally the opposite happen. But all jokes aside, this is really pretty bad and a dire indication from FedEx. It just cannot get much worse than that. And that to me tells me that Amazon is not likely going to have it may have a good quarter next one, but I don't believe it's going to kind of keep getting those pretty good earnings forever. And the 2 stocks, in my opinion, that are holding up the stock market, or actually 3 stocks, might be Google and Apple and Amazon, of course. And the main one is Apple. And Apple, I believe it's kind of slowing down. Yes, they have the new iPhone and stuff, but it's eventually going to slow down. And it's the same thing with Amazon, in my opinion. I think Google is the best of those stocks, but I believe, the ad market is going to slow down for Google too. And I already see it in my channel. The kind of ad I used to get before in terms of the payments and stuff are now a little bit lower, although I have more viewers than I had last year. Why? Because one of the biggest advertisers on Google was actually the Grayscale, Bitcoin Trust, and all those crypto type of ads. And many of them, like Voyager, went under, and this industry is all, falling apart as the bubble is popping. So you don't really have that pretty big ad spending on Google. And I believe Google is eventually going to experience slower ad revenue, which is very normal. But again, my main message from this very short video is that all the indicators are flashing red. It doesn't mean that we're going to have a massive market crash or a massive recession, but the odds of the likelihood of this happening are rising and rising by the day. Therefore, I would not personally be FOMOing into the bear market rallies that Wall Street wants you to FOMO into. If you look at, from 2000 to 2008 and even the 2000 market crash, it's all the same pattern. It's all followed by optimism, bear market rallies and all kind of false stuff just for them to sell out and to get you to buy in. because this is how they make money. Whenever you act, they don't make money by you just being patient, sitting around, or waiting to buy something, or holding on something you have. They make money by making you act. How do they make you act? They make false stories. Like, you remember the end of the month portfolio rebalancing that I was talking about, like, was it a month or 2 months ago, that, at the end of the month, they're going to balance the portfolio and then stocks are going to go up, and stocks crashed after that. And it's the same thing with the tax loss harvesting at the end of 2021. And you're going to have many more of those stories as we go along in this historic, stock market crash. And the most important thing is just keep asking yourself, the main problem is inflation, is the slowing economy, and is the Federal Reserve tightening and, earnings suffering and stuff. Is this getting better? If it's not getting better, then this is likely a bear market rally. Now, if it is getting better, the earnings are better, Best Buy is making more instead of cutting guidance by 10% or something. If FedEx is making more money instead of less money, just ask yourself. And if those things are true, then maybe we're heading for a pretty good, sustained rally. But if we do have those kind of false things that, the Fed is going to pivot, or portfolio rebalancing, or some kind of false stories that they make on Wall Street to get you to buy in, don't believe in them, and kind of just, be a contrarian, trust your own thesis, and don't let the market kind of guide you where you think something is right. Just look at the data, and if it's not getting better, it's likely going to get worse. So therefore, this was my kind of short message for today. So some of you, I don't like when you guys FOMO on those bear market rallies, thinking this time is different, or we have the new economy, or whatever. Also, if the underlying fundamentals are getting worse. So I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.